All right, 80% win rate strategy. I'm not going to waste any of your time. I'm just going to get straight into what the strategy is, and I'll give you a few examples as well. I'm going to keep this video really short and sweet, so please do drop a like, subscribe, and if you want signals for this strategy, you can get them in the description below. Sign up for the private Discord. So very simply, this is the strategy. You've got your accumulation phase in the market. You've obviously built up a level of liquidity here. We all know that there's loads of stop losses below this level, because there always is. People put their stop losses below lows thinking that the price will bounce at that level again like this, and then continue to the upside in favor of them. You're looking for that lovely liquidity sweep of those people to the downside, and you want to see some good momentum to the downside, and then you want to see that V shape back to the upside like this. This is essentially what we're looking for in the model for the strategy. This is my personal version of the strategy. There are a few people out there, I'd say 3 or 4 different people that are talking about this kind of strategy at the moment. One of them being Dodgy, who is someone that I think is really, really killing it in the game. Definitely go check them out. But this is my version of the strategy that I've decided to hone, and my specific entry model, and also my specific take profit model, which I think is really important as well. So basically, you've got your accumulation, you've got your manipulation, and then your distribution. AMD, this is obviously ICT Concepts. Someone else to go check out if you want more information about that. But this is very, very simple to find on the charts. And I think this is a really, really easy and good way of trading on the markets. As I said, over the past 6 months or so, I've got around an 80% win rate with this strategy, which is absolutely remarkable, really. And it's changed the way that I view the markets completely. I always used to think that the market was made up of just levels of supply and demand, where basically the price would just bounce at these levels or break through them and then use them as resistance. And that is the case. But really what the market is a stop loss hunting machine. And if you get that into your head, you realize that when the market wants to go and take these levels of liquidity and then reverse back around more often than not, you realize that the market is completely changed in your mind. So for the strategy then, accumulation, you've got your V shape like this. You're looking for the V shape to basically reverse back around in, I would say 5 or 6, 7 candles, whether you're on the 1 minute, 2 minute, 3 minute or 5 minute. Generally speaking, I do combine into a higher time frame. If we have, say for example, a position that looks kind of like this and it's got 6 or 7, 8, 9, 10 candles, we start getting a lot more candles than this. I will just combine into a higher time frame, so it'll turn into 6 candles or 5 candles or whatever. And then what you're looking for, very simply, is this fair value gap. We all know that fair value gaps are places in price where there aren't many orders, so you can accelerate through these levels of price pretty quickly. And generally speaking, when you come down and sweep liquidity with a good amount of momentum, you will create a fair value gap like this. And very simply, all you want to do is see price come up and basically close above this again like this. Once this happens, you would enter the position. With my model, you'll have your stop loss, which is a manual stop loss, which is below the fair value gap. If you close back below it, you would close the position for a loss. You're looking to target a 1R for your first take profit. Once you hit 1R, you set the rest of the position to break even and you take half the position off. So you close half the position, take profits, and then set the rest to break even. And then you have runners that target these very obvious liquidity points. And at the minute, because it is all-time highs, I'm usually always targeting the all-time high for the final runner, just because more often than not, you might see one of your runners run all the way up to all-time highs and you'll get a nice big win, increasing your RR pretty significantly. And this is essentially the model. You can see you've got your fair value gap here between 2 candles, and then you would enter when you close back above the fair value gap, targeting your 1 for 1 here, and then having your runners up through these levels. And this is essentially the strategy. Very, very simple. I like that it's so simple, because it really means that you can find these on the chart really easily, and it really does help, especially for me, really simplifying what's going on in the market. So yesterday was an interesting one because we had this ridiculously huge dump down here. We obviously swept out a bunch of really key levels of liquidity, this one here, and also all this consolidation here with tons of stop losses below that I'm sure were just sitting here. These 2 levels here, and I was waiting for this lovely V shape back up. The problem with this is there was no real fair value gaps that were worth taking, because look at the size of this fair value gap. This is pretty ridiculously huge. On the 5 minute, it was absolutely monstrously big. And to be honest, there weren't really any good entries after this huge move to the downside here. There was a potential 30-second you could have taken down here at the lows, but after such a huge move to the downside, instead of getting that V shape back up like this, we kind of started to consolidate, and we never really got any good entries on the charts here. There was an entry that you could have took. Let's have a look here. Was it a 3-minute or was it a 5-minute? I think it was a 5-minute. There was a potential entry that you could have taken, which was here. After we came up, we consolidated here. We created a new area of accumulation. You can see this is clearly accumulation for essentially an hour or two. We've got the manipulation below. And then we created that fair value gap. You can see, although this isn't as textbook as most fair value gaps, this still was valid. You can see accumulation, manipulation, V-shape back up in the space of 5 candles or so. You've got your entry here when you close back above. Obviously targeting a 1-for-1 for your first take profit there. That would have hit. You would have set the rest to break even. You would have had your second take profit at this high, which also would have hit there. And then you can see you would have got stopped out at break even on the final position, hoping that would have ran all the way back up here, as you can see. But overall, a really, really solid trade. And this is exactly the kind of thing that you're looking for in the market. We actually had a really good trade on gold yesterday, which I actually alerted in the Discord, as you can see. Let's take a quick look at this. Let's move that out of the way. You can see on open, we got basically this swing back to the downside here. And I think it was it on the 1 minute? I think I took the 1 minute on this. You can see we were going up, we're really bullish. And then we've got these levels of liquidity that we came down. We've got one here and one here. Lovely, lovely sweeps of liquidity. And then obviously you can see, let me take a look here. Was it the 2 minute that I took? One of these was super clean. I think it was probably this one. You can see we came down, closed below this level of liquidity and this level of liquidity here as well. Lovely fair value gap here. I would have entered on this candle here. As you can see, basically looking like we've got that nice 1-for-1. It's played out in the space of about 5 minutes or so, set the rest to break even, and then I basically took profit. I think there wasn't any clear targets because we were obviously running up for gold quite considerably here. But I basically decided to take profit again at 2R. So you can see we've got everything that we needed really. We've got this price action here, lovely liquidity sweep, V-shape back up, 5, 6, 7 candles, good momentum back to the upside, closing above the inverted fair value gap, stop loss below if we close back down. 1-for-1 take profit for 1R. We come up, we hit 1R. I set the rest of the position to break even. You can see we never came down and hit that again. And then I took another half off, I think was at 2R here, because I didn't know how far we were going to go. And I'm actually still in a runner for this, although it was very, very close to getting stopped at break even. Still in a runner up to the, I think it was the 4-hour high, which would be this level here. As you can see, this would be a good final take profit. Tons of stop losses up there, I'm sure. And that is the strategy. I'm not going to bore you too much with any more details. Definitely go check this out yourself. Check out my other videos if you want to learn more, and I'll show you tons of examples. I'll show you how to trade the strategy every single day. So make sure to drop a like, subscribe to the channel, and if you do want alerts and signals for this, and to generally learn, you can join the private Discord. I'll be doing daily outlooks for levels to look for every day, and also alerting potential trades that I'll be taking. I'll catch you in the next video. Cheers.